India faces a defining moment. The macro picture looks strong. High growth, controlled inflation, $135 billion in FDI commitments. And yet, there are questions. Why isn't private capex picking up? Can Indian companies become global champions? In the latest edition of the Economic Times CEO Roundtable, Executive Editor Sruthijith KK talks to industry titans. Priya Nair, CEO and MD Hindustan Unilever, Uday Kotak, founder Kotak Mahindra Bank, Sunil Bharti Mittal, Chairman Bharti Enterprises, Sajjan Jindal, Chairman JSW Group, Lalit Keshre, co-founder and CEO Groww, Abhishek Manu Singhvi, Senior Advocate, and Debasish Mishra, Chief Growth Officer at Deloitte South Asia. Together, they talk about India's biggest contradictions: world-beating valuations but lagging innovation, political stability but bureaucratic hostility to profit, a consumer market on fire even as export competitiveness remains elusive. From judicial reforms to AI infrastructure, this conversation asks the hard questions about what India must do differently to reach developed economy status by 2047. Listen on, it's Tuesday, the 16th of December. I'm Anirban Chaudhary. This is the Morning Brief.
When you look at India today, the macro picture is quite encouraging. India is rather well poised. There is high growth. Inflation is low. FDI has been a little slow, but we are seeing in recent weeks tremendous amounts of announcements. $135 billion this year alone has been committed, as the Times of India says today. GCCs are thriving. A lot of FDI is coming, especially into AI-related infrastructure, data centers. But at the same time, there are concerns. We are not seeing a lot of growth in private capex. State spending is still carrying the economy a whole lot. The consumption story, about which we hope to hear from Priya quite a bit today, needed a tax break. And that is just on the domestic front. On the international front, as we all know, Trump's tariff tantrums are causing problems across sectors. The rise of AI and what that could mean for jobs in a few years from now is indeed a source of anxiety. With that as the backdrop, I want to open it up to our esteemed panelists. What we're going to do is, I would like to have a round of opening statements from all of you, in which if you could mention one thing about India today that is a source of pride, satisfaction, and confidence, and one thing that is a source of concern. We'll start with you, Priya.
If I had to say one thing that I'm finding is that 65% of India still lives in the villages. And I think we need to always remember that. And I would say to you, dehat badal raha hai. And that's a very important way in which India is changing. There are more women at work. It's 40% of women now at work in rural India. And we are seeing rural wages for the first time start to go up. So we are seeing affluence grow in rural India.
I think the India of today is about stability, whether it's political stability, whether it's macroeconomic stability. India gives a great picture of a very stable country in a pretty uncertain world. Along with that, I think the Indian of today has changed, where most Indians thought about mera future is outside. Most Indians are now ready to think about a future in India. And this confidence is something which we need to sustain and nurture. And that is where our next opportunity and challenge is.
Well, I think the scale and size of India is the biggest opportunity. 1.5 billion people, a continent of consumers. Anybody in the world will look at it very favorably. And that really gives Indian companies a really great deal of heft to do bigger and better things. My area of concern would be innovation and R&D. This is where I would really say the private sector is spending much less, about 0.5% to 0.75% compared to 6 to 8% of all the nations which are prospering.
So I believe very strongly in India. So does everybody in this room. Today, we have this sweet spot. We've been thinking for the last 40 years that when will be the India decade? But I think we are now right there.
I think I'm very excited about the rise of entrepreneurship in tier 2, tier 3 cities. Like if we look at our customers also, like we talk about all the internet entrepreneurs and, large companies and so on, but there are a lot of small businesses that are emerging out. And I'm concerned about is how can we kind of fund these entrepreneurs across the country?
Well, I think to look at both positives and negatives, it's important to have a somewhat historical perspective. India happens to be the only country which emerged out of the yoke of imperialism from the 1930s to the 60s. It's the only country which has remained a vibrant economy. And of course, thereafter, if you look at the figures which voted in 51 and the 642 million which voted the last election, half of those women, literacy gains, poverty reduction. So we are, as everybody says, in a sweet spot. But one clear challenge is clearly the underemphasis in the economic sense of one of the best and the brightest sectors, the legal sector, the ABCD, where A stands for access, B for backlog, C for cost, and D for delay, is a big dampener for economic growth itself. And unfortunately, one of the major reasons is the politics of the judiciary. Politics of the judiciary would make the politics of politicians blush. And we've had at any point of time in 75 years, 33% vacancies in the paltry figure of 1,100 high court judges across the country. At any point in 75 years, we've had a remarkable 25% vacancy in the lower courts. So there's just no way in which we can fix this broken system unless we address that. And we need to reduce politics there and increase solid decision making.
I'm quite excited about the way the consumption will pan out beyond $3,000 per capita. I think that's going to be a massive change in the pattern of consumption and the focus finally around manufacturing. That's finally coming back. But I think the way we have laid the foundation for the digital public infrastructure, what AI can do going forward on top of this digital public infrastructure, and that can really impact our MSME, our farms, our clinics, our classrooms. What India can give to the world is citizen-centric and trustworthy AI and its impact on human lives and livelihoods. On the concern side, I think we need to catch up on total factor productivity, particularly in the MSME, and that will really boost the next leg of economic development.
Sunil, I would like to come to you. I was listening to a discussion that you were doing the other day where you laid out your dreams for Airtel across the world. So in that sense, Airtel is already a substantial multinational company with presence in more than 16 countries and so on. Could you discuss for us what is the next leap that you want to make?
Well, there are going to be a handful of Indian companies in the next couple of decades which will have enough and more to go global. Airtel is one of the few companies which is present now in 16 countries outside India and relying a lot on the stuff that we do here in India. UK, we have already made a big move, as you know. We've gone and picked up a 25% stake in BT. And it's one area where I would say a homegrown, rooted company right here in India could possibly become the world's largest telecom company in the next 10 years. And when you carry Indian brand outside, it's not just India's capital asset base grows. You also open those markets for other Indian companies that follow.
Priya, let me come to you. One of the sectors that is hardest to read today, to my mind at least, is India's consumer sector. When you look at urban India, and premiumization has been a very, very strong trend. But how is a house like HUL catering to the youth of today, the Instagram generation? How do you compete with all these D2C brands? Give us a flavor of all of that, the challenge from the quick commerce channels.
I think the value of the consumer goods sector today is in segmenting India. Let me give you an example. You look at the opportunity that you have now to segment the top 100 million Indians because there is an emerging different channel of commerce, whether it is quick commerce, D2C, digital commerce, but also what's happening with digital in terms of media. You are able to now segment and reach different audiences in India. And that provides a company the opportunity to serve niche consumer segments, which you weren't able to serve before.
But do companies like yours have to think about these things differently? Because you're seeing a lot of younger consumers value authenticity a lot. They connect with founders. They're drawn to that individual story and so on. How can you tackle that, or how can you compete with that?
What's happening is consumers are more aware than they were ever before. And actually, it serves well to companies who are dependent on deep science, technology, R&D, and all the billions of dollars we spend to develop patented products. We can now take this out to consumers. So the fundamentals of what consumers are looking for isn't changing. Whether it's great products, great brands, packaged in a beautiful way with deep science and technology, the way you build those brands indeed are changing. And I think that's what you're referencing. And all companies are working towards these shifts. And it's very exciting that the journey we are on.
Uday, let me come to you. One of the comments that I saw recently, which made me think, was from the esteemed Kotak fund manager, equities head, Mr. Sanjeev Prasad, who talked about how in this flood of IPO money we have seen recently, or IPOs we have seen recently, a large portion of that is OFS and secondaries, and very little is going into plant and machinery and into the companies. Is this a structural problem? How do you view this?
You got to divide it into two parts. First is a lot of companies have raised money in their companies through private equity. Having said that, you reached a point where valuations in India compared to other global valuations have been much higher as multiples. And you can look at any sector. I think Priya's consumer sector, Hindustan Unilever multiples are much higher than Unilever multiples. And that's true across sectors, LG, Hyundai, name it. We today sit with $800 billion of foreign portfolio money at stock, and probably $1 trillion of stock of strategics. And the strategics for FDI purposes include private equity as well. So if your valuations are 30, 40, 50, 100, 300% higher than comparable valuations in Korea or China or any other part of the world, money moves. So what you're seeing is people seeing the opportunity of Indian markets, relative valuations, at a time when we have seen a flood of retail money coming directly and through mutual funds. And this flood has given opportunity for people to exit at much better multiples compared to what is available in other parts of the world. Mutual fund industry has had a record time. You've seen share of mutual funds, which in 2020 was 15% compared to bank deposits, is now getting close to 40% compared to bank deposits. And if I look at the next 5 or 7 years, this ratio will probably be close to 1:1. Having said that, I think I agree with Sunil's point. Most of Indian manufacturing and businesses are not investing enough for the future. Whether it's innovation, whether it's research, whether it's taking bold calls. And Sajjan is also here. We are becoming quarter se quarter tak. We have to get out of that and really think how we are building India for the next 5 to 10 years. And unfortunately, there's a lot more Indian business can do on that.
Two more themes. So one quick one is about the currency. The historic understanding, of course, is that if the economy is doing well, the currency kind of reflects the underlying strength of the economy in relative terms. But the rupees, while our numbers are looking very good, top-line growth figures, the rupee is at historic lows, but it's also underperforming emerging market peers.
I think currency is driven by two very important factors. One is your current account, and second is investment flows. The current account in India is reasonably under control despite US tariffs. So if we say close to $50 billion of net exports is at risk because of US tariffs, current account probably will be 1.3% of GDP. I think India can support that. Yes, we want to get the exports back, including to the US, but it's not something which is going to disproportionately affect currency. It will on the margin. Also keep in mind, within our current account, it's gold. Every Indian now has started thinking about gold in his or her portfolio. Therefore, we are importing more gold, which is also putting some pressure on the current account. So that's one side of the equation. On the other side is what I just discussed. We have a $1.8 trillion stock of FPI plus FDI. Indians have tasted the wonders of equity investing, particularly post-COVID, and they're enjoying the ride. On the other hand, you have portfolio investors who are not restricted to India, or even the private equity guys. They can invest anywhere in the world. Therefore, if Indian PE for a consumer product company is 60. And the same company is available at a PE of 15 with a growth differential not dramatically to protect us, which is good. I'm not against that. But where is competitiveness of Indian exports to take on the world? Look at China. It's an unbelievable level of trade surplus they are running right now. And India-China is net $100 billion India imports from China.
So, Mr. Jindal, let me come to you. I personally find it a bit hard to read the economy at the moment. The headline growth numbers, as I said, indeed very, very impressive. Even the ADBS yesterday said 7.2% growth. As a head of a large diversified conglomerate, are you feeling that level of economic activity?
You want honest opinion?
100%, always.
No, I'm not feeling that the economy is really growing at 7.2 or 8% in the last quarter. So I'm not feeling that. But just to answer Uday's point that why Indian industry is not export competitive or why we are not exporting, I would say that first of all, we are trying to meet our own demand. But in many areas, we are also very competitive globally. If you look at the auto components, we are a very large exporter of auto components. We are very efficient industry. But there are many other factors where Indian industry is not yet very competitive because of our cost of logistics, our cost of finance. And there are many factors which pushes us down to become globally competitive.
What about private capex? It is certainly happening in several sectors. Many top houses are certainly investing, but as a whole and as a percentage of GDP, it has come down and it's not picking up. What do you think is the reason for that?
You're putting all the difficult questions to me.
Yes.
So the private capital, why it's not forming or coming into India or into the industry, why industry is not spending, is that we have this mindset in our bureaucracy, in our whole system where they tend to hate if we make money. Then there is always a question mark and then they try to create issues that we should not be making that much money. So that's why the private capital or private industry is not really taking that risk anymore. And secondly, the era of bankruptcy that happened over the last 10, 15 years, where the IBC code came in. Today, the new entrepreneurs are not willing to take that kind of risk. What we took today, nobody will take that risk. So the laws and all, maybe we become a mature economy. But the fact is that today, the industry will not take that kind of a leap to take that risk.
But Lalit, your generation of entrepreneurs are looking at a different kind of risk. Bank credit is not even a suitable instrument for your kind of businesses. It is venture capital. And of course, now public markets are embracing you guys with great enthusiasm. Could you take us through the journey of building Groww and what that says about building a new age business in contemporary India?
Sure. So we come from tech background. We don't build factories. So it's mostly human capital. And if you're building a product, then you need to get a bunch of engineers, build product and so on. And that's where VCs become the choice because they are, anyways, in US, they have made a lot of money on companies like Google and Facebook and so on. So that's their model that they kind of underwrite on some future potential with some burn in initial days. I think it's very well-established formula. So nothing kind of new in that for us.
Very, very modest of you. But yours is also an interesting case where, in your category, you already had an important player who was quite successful. That never gave you pause?
So we never thought from category. See, when we come to Bombay, when we got listed also, we talk about we are broker or we are mutual fund distributor. In fact, when we started, we did not even think that we will ever become a broker because broking is a way to serve the customer, right? So we always come from the customer mindset. The idea was to build like investing easy for customers. And then we realized, to make that, you first need to become a mutual fund distributor. So we got this NISM exam or whatever, you give that, take a mutual fund distribution license. You start that. Then customers are, we need direct mutual funds. Then customers say, we want to buy stocks. So you need broking license. So you become a broker, then, and so on, right? So I think the way we look at it is you are building for customer and then whatever is needed, then you do that.
Dr. Singhvi, let me come to you now. You made some very important points in your opening remarks. You talked about the need for judicial reforms. Enforcement of contracts is one of the things that fuel ease of doing business. It is not great. What does India need to do to reform and make enforcement of contracts easier?
Well, it's a much larger question of reforms in the administration of justice. But in the limited time, I think it's vital to go for the very important virtues in any legal system, the virtues of predictability, certainty, security. And that cannot happen unless there is a timeline on everything. It is very ironic and sad, and I've been speaking and writing on this subject for 3 decades, that under our very noses, our already mammoth pendency of 3.5 crores has now reached over 5.5 crores. While each one of us has been sermonizing, seminarizing, speaking, writing reports, setting up committees. As a very wise wag put it, a committee is a group of the unfit appointed by the unwilling to do the unnecessary. So under our noses, this has happened. And let me tell you, this is not an insurmountable problem. Most of these areas will go like a pack of cards. But you need a consistency of purpose. You need a 5-year plan between 5 chief justices. They can agree to disagree on a lot of other issues, but they must agree that these 10 things we agree on and implement that. And most of these areas will go away. That is one part. The other is that the artery of the legal system is so clogged that you need to not only push the things along that artery, but also to declog it by what is now we have a brand new act, mediation. Till now, alternative dispute resolution has worked only for a particular category of smaller matters, not for the big corporate disputes which Sajjan may have or which Sunil may have. Now you have a spanking new excellent act. If we bring in the mediation culture, one major way would be to declog the arteries of 5.5 crore cases, is to take a chunk out and subject them to much shorter, quicker mediation, because the original alternative dispute resolution was arbitration, which has failed completely because arbitration has become what somebody rightly said is pre-litigation litigation. So you need to do these things and you need to do it consistently. And unfortunately in our country, everybody wants to leave a stamp and therefore there are knee-jerk mid-course corrections. You need to give it 5-year push on 1 or 2 or 5 things and it'll start showing results.
But are you hopeful that things will improve substantially?
Well, of course I'm hopeful and I don't think we have much of an option except to be optimistic while being realistic. We can't be pessimistic about this. But I don't think it's such an insurmountable problem, frankly. I think that if just 5-7 things are taken up and all the 3 organs focus on them and a bit of shedding of egos, a bit of more cooperation, a large chunk of this can be managed. And frankly, I believe that if this audience, which is 90% a non-law audience, 95% a lay audience, were told to select appointments to the bench, blindfolded and going across 10 high courts within a month, they would all be able to do it because everybody knows who are the eligible ones. So what we do is we select the appointees and then we start disappointing them instead of appointing them. So this is the kind of politics which has to stop. Of course, along with technology is a big thing, aggregation of cases, subject-wide disposal, mass disposals, evening courts. There's a whole lot of things, but you need to take 10 of them and implement them with a unity of purpose and a focus, which sadly has been missing at several levels. Sometimes a bureaucracy, sometimes other sectors.
Debasish, on the subject of AI, you look at it from a broad prism. There clearly are 2 AI superpowers in the world today, and that is the United States and China. India is attracting a lot of investment in AI infrastructure in terms of data centers and so on. But we're not as yet an AI superpower. It involves a lot of compute, a lot of electricity, a lot of talent. What should be India's approach to this coming era to gain competitiveness in this regard?
See, interestingly, although there is a general conception India missed the bus, the AI journey is just starting. And if you look at even in the US context, the enterprise level AI hasn't taken off. So it's all at the consumer end. But what India needs today is a lot of compute power. And second is we need to have our own Indic language foundation models. We need to have models which can tell a farmer, given the soil condition, moisture, what crop to go for and what solution to have. So that's why I mentioned in my opening remark also, given that we have this digital public infrastructure, which is basically now an identity plus payment. On top of that layer, if you put compute plus model plus the apps, New business models will emerge from DPI 1.0. Coming back to the question of innovation, see, India has cracked to the capital and labor part of it. As been mentioned, that if you have to improve the total factor productivity, you have to be innovative and use of digital and other cutting edge technology to make Indian manufacturing and every segment globally competitive. Otherwise, you cannot do export. It's all linked to that innovation and use of cutting edge technology.
Mr. Mittal, let me come to you on a more current topic. After the events in the civil aviation sector in the last few weeks, there is a lot of thinking about concentration risk. One player having a lot of market share or two players in any sector amounting to a disproportionate market share. Telecom is a virtual duopoly in that sense. Two players have a very large market share. What do you think should India's policy approach be towards de-risking from concentration risk?
Well, I think in telecom, while two operators are dominant at the moment, there are two more. There is still Vodafone Idea, and as you have seen, government is planning to give them some significant concessions. And then there is state-run BSNL. Now, telecom is a bit different than airlines. One, you have to have a nationwide network, and you can't have multiple digital highways, just like you can't have multiple roads. So there's an amount of limitation from that point of view. In airlines, you can actually, with 5, 10, 15 planes, you can start a decent level of service, which is not possible in telecom. So I would say world over, if you see US down to 3 operators, UK down to 3 operators, France is going from 4 to 3 now, Italy has just gone to 3, most of Africa is 2 operators. But yes, more competition is always welcome. We have always maintained 3 private operators is a good place to be. Anything more than that perhaps will be an overkill.
Uday, quickly on the RBI allowing recently Indian banks to do financing of M&A. Is that going to change the landscape significantly?
I think, first of all, it's a good thing. Having said that, there are significant amount of regulatory norms which have been put in place. Therefore, I don't think it's going to fly to the extent it needs to. Therefore, hopefully over time, as the regulator gets more confidence, it will open up even further.
What is one change in mindset we as a society or at an individual level need? And what is one policy reform India needs to stay on course with this dream of becoming a first world economy? This time we will start from reverse with Debasish.
I think you have to have an innovative mindset. And as they mentioned in the beginning, we need to come out of this quarter se quarter tak kind of mindset and think more longer term.
Dr. Singhvi?
I think there is significant scope for further reform in labor. As far as mindset is concerned, I think the larger mindset, which is partly the sardine mentality, not being happy when the other chap is making money. This thing has to change as far as the economic ecosystem is concerned. I think this push that money making can be done with regulation, can lead to jobs, can help everybody. That has to start with the bureaucracy. Let me tell you, that is where it is the worst. And it has to then spread evenly over other sectors.
Lalit?
From mindset perspective, I think we should be able to imagine that we can build very large global companies from India.
Sajjan?
I think what Lalit said, that mindset that we can be world beaters and we can build companies which can be global in size, global in quality, global in technology. So that's some mindset that we really need to build. That is one. And second, as Sunil said, that we cannot do the first thing unless we innovate, which Indian companies are not doing. So we need to do that.
Well, I think we are in an incredible moment in time in history where India is growing. There's a restless youth out here. We have a very strong political leader who wants India to grow. If in 2047 we'll not get to $30 trillion, we'll get to $22, $23 trillion. India will be a very big power. This is the moment, to my mind, for everybody to double down. Private capital is there, foreign capital is there. I think India needs to take bigger, bolder bets, and the political leadership should encourage that.
Uday?
Purpose, passion, paranoia. Paranoia is the most important. Most Indians in today's world have started believing in what I call as a cruise mode. It's time for us to believe that we have a long way to go. We've got to be hungry and foolish. That's what we really need to do as every Indian to build India for the future.
Priya?
I wanted to end on a positive note to remind all of us that, we are the fastest growing large economy in the world. This should be the decade of India. We have to make sure that the demographic dividend of India is realized, and the restless population of the young people of India deserve us to really come together and create the future of India. So I think it's really about us coming together, but India deserves this.
Wonderful. A lot of insightful comments. Thank you so much for the discussion, and thank you all for being a wonderful audience. Round of applause, ladies and gentlemen. Thank you.
That's it for today. This episode was produced by Vinay Joshi, sound designed by Indranil Bhattacharjee. A new episode of The Morning Brief drops every Tuesday, Thursday, and Friday, wherever you get your podcasts. Keep listening.